Hi guys, weekly market outlook after an interesting week. This week, this was non-farm payrolls better than expected. The US dollar losing some momentum at first, but then traders used that to get fresh entry opportunities. Euro dollar falling, pound falling, the Aussie falling, and we shall examine what goes throughout this upcoming week. We got interesting data to come up this week, and this interesting data could move markets a fair bit. Question is in which direction, obviously, as a trader, since we want to bet on direction momentum. This week, as said, the non-farm payroll data came in better than expected. 227,000 new jobs created after the, say, disaster last month, 12,000 jobs only. The US dollar was losing some momentum. Now we see that a fresh opportunity is going to be seen in the markets, at least in regards to the greenback to the dollar. The aforementioned previous resistance area right now was tested and acting as a resistance, and now a downside momentum could be the case if this nicely drawn trend line will be broken to the downside. The downside pressure might work out. Now that's the daily chart here on our MetaTrader platform. We can see the market kind of in falling trend, and the 50 moving average based on the daily chart still looks somewhat moving the market motivation to lower levels. The question is whether this is going to be the case. Why? Because the weekly chart is basically supported, nicely supported. That kind of slight blue color supportive trend line, which we could basically rise somehow, was acting as a nice support zone. With that, the market motivation could be seen to the upside if the resistance zone, the 105.80, 106 area, is being broken. The upside momentum, as we declared last week, might be kind of quite some interesting opportunity. So that's the bottom line now. Shorter term, daily chart, the market's offering some sort of weakness indicated by basically this 50 moving average break by the non-farm payroll data. So downside momentum, say rather short term, might occur. However, weekly and monthly charting wise, the market might be ready to celebrate some upside momentum, as simply this supportive trend line, this zone here, has not been broken. There was support, or there is support down at this area which had been tested, and it looks like there is quite a bit of pressure to the downside, but the general idea might be that the euro is gearing up some steam medium term at least. The pound is doing something similar. There was quite a bit of momentum to lower levels. That's now the impact from Friday's non-farm payroll trading. The daily chart as well pushing this market potentially lower, at least indicating that pressure to the downside might occur. And again, on the weekly, we might say, hey, or is it time for the greenback to weaken somewhat? We've seen the recent stronger, much stronger momentum in the dollar, and that's now the question here. I might say let's stick to a mixed picture. Short term, maybe Monday, maybe Tuesday, euro dollar, pound dollar, Aussie dollar weakening, to then medium term see, depending on how numbers go, that the dollar's strength might push towards some weakness. Why? Fundamentally driven. We got data this upcoming week, and we would call it a week of interest rate decisions. We got the figures from Tuesday's Australians Royal Bank of Australia. There's no change expected, and look at this, right? There wasn't anything happening in the near and the recent future as well. So the question is, are they going to adjust interest rates? I might really doubt it here. But obviously, it might depend as well on the statement from the Royal Bank of Australia. Let's check out what the Aussie is doing, because it's kind of quite on the weaker side of things here. If I would like to buy the dollar, if I would like to sell the Aussie US dollar, there might be some opportunity in this market, as the market seems to fade from one zone to the other, and this weaker trending opportunity here. Let me zoom in and move those trend lines. Basically, the market was just not really seeing anything much. Instead, we have seen that the recent trend line here, let's draw it at this area, has basically been tested and has fallen, right? The market fell basically here. If we draw this trend line even towards the lower area here and take out our annotation motivation tool, we can see the market was nicely supported, went to the upside again, and then fell again to the downside here. And after retesting this zone, this turns resistance. Quite often what we have a resistance zone, we have a support zone, and those change direction. This is exactly what's happening here right now. So weaker market motivation kind of pushing the optimism away. Downside pattern, if so, I would see in the dollar against the Australian dollar. So Aussie is short, US dollar long, meaning Aussie US dollar currency pair, selling this to the downside as this makes somewhat sense. Let's check out what the dollar index is telling us. Basically everything against the greenback, because this dollar index is offering weaker price momentum. The non-farm payroll data has been slightly better, but let's compare it also with last month. Maybe there might be a sort of rollover in a new job. So the figures combined might not be utterly perfect. This dollar index basically is telling us that still the market is not keen to break and trade beyond the resistance area 107, 108, 106.50 zone. Has not been broken. Downside motivation being the case here. If we extend those lines, I might say below 105, 105.50, I would say a sell stop opportunity could work and could escalate those moves to the downside even further with potential market motivation. Well, if that's going to be the case, it looks kind of quite weak. But first of all, after the strength of the greenback, and many believe that the greenback, the US dollar, is still staying strong against other currencies. We shall see as well, because we see interest rate reductions, and there might be another one interest rate cut from the US. Basically, I think in 2 weeks' time, this is going to be. But obviously, other currencies are kind of quite impactful in this conglomerate of bigger things. Why? Because we got further information here from other central banks. Bank of Canada is going to adjust rates potentially as well. Overnight rate going to be adjusted by 50 basis points to the downside. This could also cause some momentum in the US against the Canadian dollar currency pair. So let's examine that one. We often like to trade those markets as it's quite volatile. Last week, it looked like basically the market would fade to the upside and would rather weaken somehow further, where we said as a trader, if the 139.30 area will be broken, we would like to apply a sell stop order. Order been placed, the market never traded below this area. So this is from this week still. The market was just rising all over the place here, but never would have triggered our sell stop order. So since there was no sell stop order triggered, we can simply just delete our order and wait for a new entry opportunity, just because the market looks like it's now going to rather rise. Why that? The pin bar of this, and this is the bottom line here, the pin bar of this candlestick pattern, this area has simply been tested and traded beyond this high point here, which indicates that the upside momentum might cause further pressure to higher levels, and that's how it looks like for now. We have this sort of doji / negative candlestick on the monthly chart, which was November, but now the market looks like it's going to extend its high point here. So now we might be keen on swapping sides above the 142 area. Could be a good zone for a buy stop opportunity. Obviously on our website, in our membership program, guys, check that one out. We'll check out and follow up on those trading opportunities, so stay tuned and check back on our website if you are keen. Nevertheless, Canadian dollar is looking to strengthen somewhat somehow, as we just stated. How about the euro? Again, the euro against the Canadian dollar is even kind of pushing back to the upside in stronger manner. So this is now looking like the 50 moving average. That's the gray color trend line here, is holding the market up from falling further. This looks like rather the upside is key. And again, same story. That's maybe an entry opportunity here that would be at 152.50. Buy stop, basically, if the market moves beyond that resistance zone, we might be in for a buying opportunity here. So that's again the area of interest here for us. resistance area, EuroCAD rising potentially even further is what goes here. And if in Canada, as we examined, if we get a rate cut, this might be, depending a bit on the press conference, depending on the wordings from the bank officials, this might be quite some positive impact for the euro. EuroCAD might strengthen, also the dollar CAD might strengthen further. So let's observe this in the next couple of trading days. Beforehand, on Wednesday, we also got CPI data from the US. I wouldn't think that these are going to move markets a fair bit. However, we had seen that figures were slightly mixed here. October, November, slightly stronger or as expected. What if inflationary momentum picks up steam again? And Donald Trump with potential further spending, economic spending, opening the floodgates again, could basically cause the market momentum to be, first of all, impactful, but second, the inflationary figures could increase, which would in turn technically be positive for a currency. So observe if the dollar's strength might resurface thereafter. Talking about the interest rate decisions, we have a couple of further interest rate decisions as we stated beforehand, and those ones are as the following. In this upcoming week, we have news from the Swiss National Bank. Are they going to move markets? Likely not too much. The Swiss franc, however, is quite an interesting currency, and the Swissy might be a something worth a consideration here, as on Thursday, Swiss National Bank interest rate decision and employment data here might be something interesting. They are going to lower interest rates, potentially at least here. Remember, the Swissies had been, the Swiss National Bank had been early in cutting rates. The SNB is expected to lower rates, and that is what could push the market again into one direction or the other. Based on long-term charts, we said early on, the market towards the end of the year is rather projected to see a strengthening Swiss franc, dollar Swissy rather moving to the downside. That's one thing. Technically on the charts here, we saw as well that the 88 area has not been really broken. Instead, the market moved to the upside. The market is showing a potential retracement here, and this retracement to the downside might be something worth a consideration. So this downside motivation here is what looks like the market's pressuring further momentum here, and I wouldn't wonder if the Swissy is going to appreciate. Wait a second, with the interest rate being cut, will this strengthen the Swissy? Well, technically not quite, but the Americans, the Federal Reserve, is also likely going to cut rates somehow further. So the bottom line might be that the Swiss franc, depending on the outcome here from the central bank, is going to face and see some impactful momentum. In this case, downside pressure, downside momentum might occur as well, and the dollar against the Swiss franc could actually weaken even further. Last but not least, this upcoming week we have further information in regards to the main refinancing rate from the European side as well, ECB. The European Central Bank might also lower interest rates somehow further. 25 basis points is going to be the expected adjustment here based on the main refinancing rate. That aside, we just talked about the euro against the Canadian dollar. And the question is now when the Europeans are going to cut rates. Is this also going to help the euro cut to the upside? Well, both central banks, the Canadian and the European Central Bank, if they both cut rates, this might not impact this market trend somehow. But the expectation is the key takeaway. The expectation and the further potential outcome, the wordings might move markets somehow. So in this case, we shall look forward for potential market motivation here and be alert in both directions. The latest talk of the recent couple of trading days. What has been going on with crypto markets? And those are really through the roof and all over the place, basically. Bitcoin had crossed the 100,000 level from one day to the other, and we saw the high point in the Asian trading session. Quite remarkable. We saw XRP moving through the roof, correcting slightly. XRP even being quite interesting, as well as it's also now again pushing pushing market motivation back to the downside somehow. So let's observe charts and how this goes. XRP is now up and rolling. We are in a little short position. We have to say that because why? We believe that this market is totally overreacted. Tulip battle doesn't happen again, right? Markets only know one direction to the upside. No, I can tell you guys, we've seen this several times that the markets went to the upside and corrected, and that's exactly how we position ourselves. We entered a quarter of a short position out of a regular shorting position. Looking at the past, that's obviously as traders what we do. We saw something like this happening, but the market didn't correct here. Instead, the market went all the way to the upside. So you need to have a ton of liquidity in your portfolio. You need to have a stop loss to protect your account capital, or you need to trade very vigilant and with small position sizes, being able to kind of capitalize on up and downside market direction. So in this case, what we do is if the market goes all the way towards the $3, $4, or even $5 side, we would be able to capitalize on this one, since we also apply slight and tiny long trades. Currently, we only in a short position and a quarter of the regular short position, as we expect the market to really move to the downside here. This is, to me at least, not a justifiable trading momentum to the upside. This is just pure craziness until this house is falling apart potentially. We've seen this here, the market went to the upside. Everyone is like long. The chatter, talk of the day. Have you bought a taxi recently with the taxi driver asking you, oh, you're trading financial markets. Are you also long in cryptos like me? Hey, and this is exactly what's happening right now. If everyone talks about it, then the market might just be into one direction, which is only the upside. Obviously not. This is where the market might actually face some correction. Are we that much to the upside now? Are we that high at the moment? We might not say so, but definitely market motivation here shows us that technical patterns offer here a potential correction, and this technical correction here, that's the RSI index, might just tell us that it could be it could be time to wait and see if a correction will follow. In any case, we are in a slight short position as we believe the market falls somehow. Same with Bitcoin. We missed the exit a little bit. We shorted all the way up here, which was a super nice entry opportunity. We closed the trade, slight profit, not too much, and we are waiting for a new entry opportunity. Why? 100,000 psychological resistance area. The market hasn't done much to lower levels. We've seen in the past the market moving to the upside, correcting a mere 50-60%. We've seen something similar here. The market went towards the 70,000 level. Everyone said, oh, we go to 100, 200,000. Yes, we are there. But from this 70,000 US dollar, we went all the way towards the 15,000. That's more of a 60-70% drop. We are now at above 100,000. Are we going to see another drop? Everyone says no. What Frank says doesn't matter, but I believe we could at least see a bigger correction. My target would be the 50 to 60,000 level. Why that? Simply this is just something where moving averages would kick in to the upside here. The moving average currently sits on the monthly, guys, that's the monthly chart. The moving average sits at 43,000. Even if we go to the in-between zone, 165, 40,000, let's just aim for 60 to 70,000. This is at least something where I might say, yeah, check, the market might correct again further. So that's why a downside momentum might occur in our view here, at least. Looking at Ripple, we talked about this. Ether looking positive, slight correction along the way. If the market breaks the high point, yeah, rocket might start to fly. That looks kind of quite cool. As we examined also last week, either the market goes straight to the upside, or like quite often the market corrects slightly, and then we get another entry potentially here to the upside in this Ether market. And looking at Solana, we have a tiny long position. What do I say? Tiny. We have a long position in Solana as the market might look good in order to break the upside here. We've seen those high points here, and we can just zoom in based on weekly charts. That's exactly the resistance area we've seen. We've tested the resistance area. We now maybe looking to weaken somehow. Medium, long term, it looks like Solana is breaking the high point. So bit of a short in Bitcoin, bit of short in XRP, and a bit of a long in Solana. So not all the tokens will and must and have to go into one direction. The likelihood they similarly follow one another, apart from the mother with Bitcoin. But looking at altcoins, there is quite some volatility being expected, and we just examined what we see. Silver and gold, for all those guys, there are some who state that silver is the new gold. I might say so, I might not say. It doesn't also matter again. I see that the market is in a bit of a corrective pattern right now. The silver medium term, yeah, it looks kind of quite bullish. The demand very much outperforms the supply. That's one thing. The paper silver market still shows us different numbers in a way. Differently charting patterns tell us that the 31 resistance area, if broken, it could kind of really move the markets to the upside. So upside motivation in silver looking good, but the market needs to first cross the 31.50 US dollar level. If this area is being broken, upside might be seen in this market. And then kind of last but not least, gold. Shaky. And geopolitical tensions. What's happening in Syria? Assad, well, seemingly left the country after really the troops, the troops taking over seemingly Damascus in the next couple of hours or days, according to the news we've heard. In any case, the geopolitical tensions seem to ease slightly. At least that's what gold prices are telling us. Currently, we're flirting and trading even below the 50 moving average. Gold stronger, a dollar stronger, gold down, dollar weakness as we examined. Medium term gold price could move to the upside. Technical terms here would again still point for upside momentum above the high point here should the market cross the 2,750 area, then the upside might continue. What's happening with the oil market? That's kind of quite something interesting and remarkable, because oil is similarly not doing anything much. The oil market has been falling. Monthly charts suggesting us that downside momentum might occur. We shall examine as well how the market goes in the near future, because now the downside is going to kind of see further pressure to lower levels. 67.25, we said below 68, everything is selling territory. Obviously, this is going to at least be tested. 50 moving average kind of acting as a resistance. Technical pin bar pattern, weekly and monthly charts suggest that the upside is well protected. So that tells us the market went to the upside, fell back to below this 50 moving average. Downside momentum might occur. The month of November, the market tried moving higher. It wasn't able to. Again, downside momentum occurring. And now we are really at this important support area. It looks like that this is going to be broken. This could be something bad for the economy. Nobody talked about it so far. What we see, everyone says American economy well underway. European economy, hey, it's been bad. It's going to be developing. Chinese economy, seeing growth figures. Australian story, not too bad. Might be that oil price is telling us the way. What if the demand story kind of disappoints? What if oil really weakens further? Because we've seen prices in the past, and guys, that's not long ago. We've seen prices in the past, if we even kind of look into these markets here, sub-negative figures basically when looking at the futures markets, but the markets here and the oil market currently might see a further drop. And why not? If we see the oil price going to 36, 15, 10 US dollars, do I believe it? No. Would I count and would I think that the market might even go that way? And would I prepare myself big time? Yes, of course. Would I buy when the market is seeing a bigger drop? Not quite. I would be very cautious, as charts really show us further weakness might be here to potentially come. Guys, on that bombshell, not nutshell, on this bombshell, I would like to wish you a happy trading week ahead. I'm looking forward if you leave some comments under the video, and not if I can help you with my or your gas fees for any crypto markets, but also any regular comments. Plus, please don't forget to subscribe to our channel to not miss any further updates. See you then. We talk to you guys next week. Have a good one trading, and see you later. Take care, everyone. Ciao.